What a terrible day here in the equity markets. S&P 500 down almost 3%. The Nasdaq is down 3.38%. In the Russell 2000 down 2.30%. Even the Dow Jones Industrial Average is down about 2.5%, or about 803 points. Let's talk about what is causing this move, because from a blind eyes perspective here, there's really no reason why the markets are selling off, but there actually is. So we're going to get into that. We're going to talk about AMC. We're going to talk about a lot here in this video. So without any further ado, we're not going to waste time. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. But most importantly, thank you guys for tuning in. Get yourself free stocks down below in the description with Webull, Moomoo, and Public. This is, like I've said many times, probably one of the last great buying opportunities that you will have for a very long time. On the back end of this, markets are going to be very strong, and this is really your time to acquire massive positions in companies that you like for the long term. Now, what is causing the markets to sell off today? Well, consumer discretionary and consumer staples are really getting destroyed today. Both of those sectors. A consumer discretionary would be, for an example, something like an Apple, right? That would be a discretionary item. You don't necessarily need a $1,000 iPhone. You could go out and buy something cheaper. It's discretionary. Look at Apple, down 4.18% today. Look at your consumer staples, something like a Walmart or a Target. Walmart yesterday had their earnings. They dropped 11.38%. Now today, down 7.19%. Yesterday's 11% drop was the largest decline for Walmart since 1983. So very, very bad. You never see this on stocks like Walmart. At the same time, Target had their earnings today, and you really never see this. Target dropped 25%, currently down $53 on the day, almost exactly 25%. Now, why exactly is this happening? Why is Walmart and Target getting just absolutely demolished? Well, this says Target shares sink 25% after company says high cost inventory woes hit profits. Target shares dropped sharply on Wednesday after the company said its quarterly profits got hit by supply chain troubles, higher fuel costs, and lower than expected sales of discretionary merchandise. The big box retailer said it saw a healthy customer, but a shift to experience-based purchases such as toys for birthday parties and luggage for trips. Target reiterated its revenue forecast, which calls for mid-single-digit growth this year and beyond. So it's not quite what people were expecting, and the earnings per share came in at $2.19 per share adjusted versus $3.07 expected. Revenue of $25.17 billion versus $24.49 billion expected. So they actually beat on revenue, but they dramatically missed on EPS, earnings per share, and that was a huge miss, almost a 30% miss on EPS due to what we just talked about and what we just mentioned. That is not so good. And typically, when you're trying to gauge the consumer, you're going to look at these kind of, consumer stocks. Are people actually going out and buying things still? What's going on with the consumer? And when you're seeing Target missing profit numbers like this, it definitely shakes up the whole group. That's why consumer discretionaries, consumer staples, large segments of the markets today took a major beating because of Target and Walmart, and that's really the main reason why markets, in my opinion, are actually down. You also did have Fed Jerome Powell yesterday basically saying that no matter what happens, we are going to get inflation down, even if that means, pushing us into a recession. Essentially, that's what he said. That's what they're going to do. And that's not a good thing. Markets, they're not going to like to hear that. So you mix that with bad earnings, just flat out terrible earnings, then you got a recipe for a 3.5% down day on the Nasdaq. And we were up, a similar amount yesterday as well. I believe about 3% on the Nasdaq, if I do remember correctly. So we're basically giving up all of yesterday's gains and likely more than that by the end of the day today. So those are the big reasons why markets are actually down today. You do have a couple headlines about oil. People are saying, I've seen a couple articles today saying that oil could double from here. And that's just ridiculous to even think about. That's a severe recession right there. And then you see Pioneer Pioneer Oil says they see oil at $100 a barrel plus for several years. So I think oil, the fears about that is definitely not helping things at all today as well. So besides these earnings that we are seeing and the bad fears about oil potentially going much higher, and something interesting with the oil markets is actually happening, and I do want to point this out, that oil, Western oil, is now more expensive than Brent. And that almost never, ever happens. And this is why you're seeing a lot of oil at your gas pumps going up. This is another reason why it's not a good sign for potentially oil prices and where they're going to go into the future. Even though oil is down today, you're still seeing gas prices going up. Now, I will say, given the earnings are now out the way, the important companies for this week, the consumer staples, consumer discretionary, so on and so forth, you don't really have any other news catalyst to really contend with for the rest of this week. You do have a couple other Fed speakers, and you do have existing home sales and a couple other real estate data points. But other than that, that is it for this week. So really the rest of this week, you're talking Thursday and Friday, you don't really have anything that's probably going to move the market. So it's all going to be dictated off of, sentiment going ahead over the next couple of days. And it definitely does not look too great today. But overall, it's still a mixed bag, even though the NASDAQ, S&P, Dow, Russell, everything is down. Look at your portfolios, especially if you're in AMC and you're all in AMC, you're actually positive 2.33% on the day. That's how much AMC is actually up. A lot of stocks are up. So even though, the markets are down dramatically, you're still seeing somewhat of a rotation. It's not a full-on sell-off in the same way that it has been over the last couple of weeks. AMC stock is above its prior support level at $13 per share. If we can close above $13 per share, I have 1277 marked right here. This has been a very important level for a while, more specifically. Then that's going to be very, very bullish. Now, the reason AMC is up is really because they announced that stake in a very small theater company, NCMI, and that is definitely seen as a good thing. People like AMC is going out and acquiring stakes in companies. They're essentially going out and to some degree buying the dip. So that is very good, and that is a bullish thing for AMC stock. But on top of that, we've talked about the executive order plenty of times here on this channel so far, and that is, in my opinion as well, boosting up some of this enthusiasm for AMC stock over the next couple of weeks. If you guys still have not seen the video that I made about the executive order, you guys definitely want to check that out. It's titled MOAS in June. Yes, if history repeats itself. Look that up and watch that video if you guys don't know about the executive order, but mix that together with some of the new positions that, say, Ray Dalio has put on AMC, or the Swiss bank buying more stock in the last quarter. There's a lot to actually be bullish about here in the current moment, as well as that, your services sector should do pretty well, especially services that do not involve using fuel, which, sure, you got to drive to the theater, but AMC, that's not a direct cost to them. So some of those kind of trades, restaurant, trades, they're probably going to do better than not compared to like airlines or something else, right? So I think there is a lot going for AMC, and I don't think the bullishness is over, especially that's what it looks like today. Even though AMC is only up 2%, the broad market's down dramatically, 3.62% on the NASDAQ. The fact that AMC is up 2% is absolutely mind-blowing if you want to put it that way. And like I said, we're above 13. Next level we need to break out above is going to be 15. My price prediction was in between 15 and 17.19 by the end of this week, really above the $15 resistance level that we are going to see. And that will turn into support again, and then below our 50-day moving average, which is going to be another big level of resistance into the future. Now, on top of that, we have seen a lot of bullish inflows as far as the option activity from institutional investors. investors, you're seeing that somewhat flipping today with a positive order value of 49%. Lots of orders that are actually coming through on the option chain that are puts. That is helping to kind of keep AMC stock tamed today, but there is a lot of option activity, a lot of potential buying, especially over the next 2 days if this situation, does continue to look more bullish and more bullish. AMC stock at one point was up almost 10%. To put that into context, absolutely insane. So we have retraced a lot, only up 2%, like I said, but I think it goes to show how explosive AMC stock is actually going to be. Now, the current short interest of free float is sitting at 21.8%. Current shares that are sold short of 112.38 million. Cost to borrow max of 4.33%. Utilization of 100%, and days to cover sitting at 3.21. So, still, shorts are not covering. This rally that we have seen as of late from $9.70 at its lowest, now up to $13, has not been a shorts covering kind of rally. It's really been due to the option activity. And if we do look at the option chain, you have 38,000 calls that are now in the money, 246,000 calls that are out of the money. That's a lot of potential buying power if AMC stock does continue on this uptrend that could potentially cause a gamma squeeze. As well as that, the puts that are in the money is going down yet again today as the stock has went up. And if we continue to go up, more of these puts will run out of the money, and that does consist of market makers going out and buying stock to de-hedge those positions. So overall, very, very bullish on AMC stock. The RSI is still under neutral, so still indicating that we are substantially oversold. RSI is currently sitting at 42.08. Like I said, neutral is 50. So we're under that by 8 points. That's still extremely oversold and could lead to a continued bounce. Now, we have not been bullish on the MACD any very long time, and it looks like by the end of the day today, we might go bullish on the MACD, and that could trigger more buying from algos and just other people in general that like to look at the MACD. It tends to be a pretty reliable indicator of future activity for a stock. So that is pretty much going to be all for this video. That's what you guys need to know for the day. That's why the markets are selling off. I don't know what is going to happen from here. I think you're going to see a lot of back and forth action, but I do think AMC stock will continue to be bullish for the most part until we do get some kind of bad news or bad sector data for theaters, something along those lines, which I don't exactly see coming. So that's it. You guys enjoy the rest of your day. Get your free stocks down below in the description of this video with Webull, Moomoo, and Public. And if you guys want to come join the trading group, link down below in the pinned comment to do so for that. Thank you for watching, and I'll see you in the next one.